What's up, everyone, and welcome back to Crypto Clips, where we feel that cryptocurrency is the next big thing. This channel is jam-packed with enough crypto knowledge to make your eyes suffer just staring at it. As the saying goes, no pain, no gain. So go ahead and subscribe to the channel and set your notification preferences to receive notifications whenever new content is posted. We recognize the importance of time, which is why we've included timestamps in the video chronology to save you time and prevent you from becoming disoriented. We'd greatly appreciate it if you could sit through the entire thing. Ladies and gentlemen, please join your hands, concentrate your attention, and take a seat, because it is time to answer your concerns about cryptocurrency taxation. Thank you for your participation. It's possible that a large number of you will have questions about the topics we'll be addressing today. As a result, we've gathered them together and are presenting them to you. As we bring them to you along the route, we will answer them in the hopes that it will be of use to you. If you have that one friend who asks you about cryptocurrency taxes, you may direct them to this video. Let's jump right into it, shall we? So, the first question about cryptocurrency taxation. If we sell our Bitcoin and receive a profit, will we be subject to taxation if we do not withdraw the money from our account? So, this is a good question, and we get asked this all the time. So here's our response to it. You have a cryptocurrency account, and within that account, let's assume you purchased a Bitcoin for the sum of $10,000, and then you sold it for $60,000, which resulted in a profit, and a significant profit at that. You have to ask yourself if you're going to touch that money. In other words, if you don't cash out and instead send the money back to your bank account in US dollars, will you still be subject to taxation? The answer is yes, because it is near to the time when the trade is scheduled to conclude. It makes no difference when you take the money out. So, what exactly does this mean? What we mean by the deal closure is that the trade has been completed because you have both purchased and sold, making the trade complete. This is the point at which the event becomes a taxable event, which occurs after the deal has been completed. It is entirely up to you what you do with your money at that moment, whether you choose to keep it in your cryptocurrency account or if you choose to ship it back to your bank account in exchange for US dollars. However, you will be subject to tax when the transaction is completed, not when the money is withdrawn. We hope this has answered your question, but it is an excellent one. So, that brings us to question number 2 on crypto taxes. Will we be required to pay taxes if we purchase Bitcoin and it rises in value while we simply hold on to it? So, you bought Bitcoin or another altcoin, whatever it may be, and then it just keeps increasing in value, right? Let's imagine you purchased Bitcoin for $10,000 and it was worth $60,000 by the end of the year, but you didn't sell it. Will you be subjected to taxation? In such a case, the answer is no, because the trade has not been completed, because you only completed one portion of it rather than both. As a result, the transaction has not been completed since you have just purchased it and not sold it. Therefore, there have been no taxable events triggered. So what you're dealing with right now is that you purchased a Bitcoin for $10,000, grown in value to $60,000 as of today. That discrepancy is referred to as an unrealized gain, because you were not aware of it because you did not sell your position, while also failing to execute the deal. In other words, unrealized profits that are not subject to taxation will be treated as non-taxable events. But that is a really fair question to ask about cryptocurrency taxes. On the third question on crypto taxes, how much will we owe in taxes? Please understand that you will only be taxed on your profits, which is the first of 2 points I'd want to make. So, we want that to be crystal clear, and again, if we continue to use this situation or scenario, if you purchased Bitcoin for $10,000 and sold it for $60,000, you would have made a $50,000 profit on your investment. You won't be taxed on the entire $60,000 because the first $10,000, which was your buy-in, your principal, your cost basis, whatever you want to call it, is going to be the same thing you're going to be taxed on. You will only be required to pay taxes on your profits. In addition, depending on whether you are dealing with a short-term capital gain or a long-term capital gain, the amount of tax you pay will differ. Let us discuss this further to help you understand what we are talking about. If you buy and sell within a year of each other, you will have made a short-term financial gain. It will be determined by your holding time, which will be 1 year or less. If you bought and sold inside that time frame, and the duration between when you bought and sold was more than 1 year, you will be required to pay the tax. You're going to be considered a long-term capital gain for tax purposes. Short-term capital gains and long-term capital gains are both terms that refer to the same thing. The distinction is that there will be a significant tax difference between a short-term capital gain and a long-term capital gain in this situation. Long-term capital gains are rewarded with lower taxes, which encourage you to make more of them. We are not implying that you should always opt for long-term capital gains as a strategy. Our position is that long-term capital gains will be subject to significantly higher tax treatment. And this is based solely on the length of time that you have held the asset, nothing more. So, what is the tax rate on short-term capital gains, and how much is it? The tax rate is determined by how much money you make overall, or your total income for the year. We're talking about everything, including money from your jobs, money from stocks, interest, dividends, everything else. Short-term capital gains are subject to ordinary tax rates, at the same rates as long-term capital gains. If you purchased Bitcoin for $10,000 and sold it the next day for $11,000, you made a $1,000 profit, which will be subject to short-term capital gains tax because the transaction occurred within 365 days or less. Short-term capital gains, such as the $1,000 profit that you made, will be taxed at your ordinary usual tax rates, because short-term capital gains are taxed at your regular ordinary tax rates, as opposed to capital gains that are not taxed at all. According to a large number of people, short-term capital gains rates are like a penalty. Perhaps it serves as a disincentive to do something. Our opinion is that you are not penalized for short-term rates because you are simply being taxed at your regular rates. Rather, we believe that long-term capital gains rates provide you with an incentive and favorable tax treatment. However, we do not believe that you are being penalized for short-term rates because you are merely not reaping the benefits of the long-term capital gains rates. So, what are short-term capital gains rates going to be? And how much will they be? The answer is that it is calculated depending on your entire income. It's possible that you'll pay as little as 10% in taxes on your overall income. But if you make millions of dollars, you'll be paying 30-something% in taxes, because the more money you make, the higher your regular tax rates will be. The lower your regular tax rates will be if the lower money you make. So again, your short-term capital gains rates will be the same as your regular rates, while your long-term capital gains rates, which are the same as your regular rates if you bought and sold within a year of each other, will be significantly better than your regular rates. Say your usual rates are 30 to 35%. You're making a lot of money and your regular rates are something like that. In that case, your long-term capital gains rates are going to be like 20%. And if your regular rates are 28%, your long-term capital gains rates are going to be something like 15%. If your regular rates are 10%, your long-term capital gains rates are going to be 0%, which means they're all going to be completely tax-free. In other words, long-term capital gains rates will always be lower than ordinary income tax rates in comparison to them. As a result, long-term capital gains are incentivized, which is something you should be aware of since you have earnings on big amounts of profits. This could result in a significant difference in your tax liability. We simply want you to be aware of the distinction between short-term capital gains rates and long-term capital gains rates when it comes to crypto-related tax liabilities. Fourth question on cryptocurrency taxes. What is the tax treatment? Even if you're lending cryptos or using a trading robot, you might be one of the many beginners who believe the only way to make money with cryptocurrencies is to buy and sell them. However, intermediate and advanced crypto traders understand that there are many other functions that cryptos can perform. And the more functions that cryptos can perform, the more ways there are to make money with cryptocurrencies. If you are lending out your cryptos, the tax treatment will be the same as it would be if you were earning interest money. Thus, there will be no difference. You should be aware that if you decide to lend your cryptos, you will be compensated with interest, which is normally given in the form of that same cryptocurrency. If you lend money out in Ripple, for example, you might get paid interest in Ripple, but you'll need to convert it to US dollars at some point. No matter what you lend out, no matter what you get compensated for, and no matter whether you get compensated in interest in USDT or BTC or Ripple or whatever altcoin it may be, that will be classified as interest income on your tax return, no matter what you lend out or what you get compensated for. When employing a trading robot, those gains are calculated on the assumption that the robot will not be placing trades, and that you will be purchasing, holding, and selling over the course of a year. As a result, we anticipate a significant volume of traffic coming in and out of the airport. In that case, the gains will still be short-term capital gains, and they will just be distributed in the manner in which we anticipate that you would have hundreds, if not thousands, of these transactions, all of which will be short-term capital gains. The fifth question that relates to crypto taxes. Can we reinvest our cryptocurrency gains in order to defer or avoid paying tax on them? This is an excellent question. There are a lot of folks who believe that we comprehend what they are attempting to do. As an example, you can reinvest your gains in particular asset classes, allowing you to avoid or defer paying taxes. Realty is a fantastic example of this. In the case of real estate, let's say you sold a rental home in exchange for a huge gain. You could use those profits to invest in another rental property, preferably a like-kind property, and then defer paying taxes. This is known as a like-kind exchange. You take the profits from one asset and invest them in another asset of a similar nature, after which you defer paying taxes on the new asset. The Internal Revenue Service has specifically said that cryptocurrencies cannot be used in conjunction with a like-type exchange. This like-kind exchange rule is no longer in effect because it has been tried and tested. Again, this is not permitted by the IRS. Consequently, you cannot defer or avoid the gain in the same way that you could with like-kind swap while using cryptocurrency. Once again, this is as simple as it gets in terms of complexity. From the IRS perspective, everything seems so clear. Question number 6 on cryptocurrency taxes. Will the Internal Revenue Service be aware of our Bitcoin activities? This is going to be determined by the market in which you are trading. If your account is in compliance with US rules and regulations, as well as the Internal Revenue Service as to where your account is located, they'll know everything about your trades because they are in compliance with the rules. This includes your crypto account and the company that manages your brokerage account. They'll be providing the same information to both the US government and the IRS, in addition to providing you with tax documents. They're going to be well informed about your profession. It is not possible to answer yes if the situation is not in accordance with the US or IRS reporting rules. The IRS will have no visibility into your trades unless they try to track you down through the blockchain, using blockchain analysis tools, which is something the FBI is attempting to do. We are only stating the obvious. Nothing is reported to the Internal Revenue Service. The IRS laws and regulations will not be followed if the account is held in an offshore account or on an offshore exchange, or if the exchange is located outside of the United States. They will not be providing information to the Internal Revenue Service. Knowing the IRS, they'll be in the dark if they're not in compliance with the tax code and regulations. For question number 7 about crypto taxes, will our cryptocurrency accounts give us a tax form? In relation to the prior question, if they are in compliance with IRS reporting, if your firm or the company with whom your stock or cryptocurrency accounts are held in is in conformity with the US laws and IRS regulations, then they will provide you with a tax form. The Coinbase or the Robinhood, for example, are ideal examples. They're going to be like Robinhood. They're going to give you a flawless 1099-B, and they're going to tell you everything you need to know about tax software plugins here at home. If the company with which you have an account is not in compliance with the IRS or the United States, they will not be creating a 1099-B United States tax form for you, since they have no need to do so. If they are not obligated to do so, then why would they? These people aren't going to waste their time and energy providing you with an IRS-regulated documentation. As a result, in the event when you are dealing with an account that is not in accordance with IRS reporting standards, it is your company's responsibility to put those trades together and to present them on your tax return. The following is our proposal on how to go about it. However, if they aren't willing or able to provide you with the tax form or the 1099-B, you can download your trades into a spreadsheet file and use that as your tax form. The CSV file has been created, and you can download your trades into that CSV file. You won't find your private keys, your keys, or anything else in this spreadsheet because it's just a spreadsheet. There is no sensitive information on this page. It is simply a list of all your deals. You can use that spreadsheet to generate an IRS form, which you can then incorporate into your home tax program or just attach to your tax return. According to what we've seen, these companies are really fairly priced. They charge between $20 and $250 to take care of everything. We'll provide links to a range of those companies down below. Although you can choose whatever is more appropriate for you afterwards, remember that it is your duty if the 10AB tax form isn't provided. If you're aware of this, we would like to leave you with some words of encouragement. In the event that you have suffered crypto-related losses, do not ignore them, since they are worth their weight in gold when it comes to tax deductions, because losses are tax deductible. Tax deductions allow you to save money on your taxes, which is actual money because every dollar you save is a dollar you make. To be clear, we are not saying that if you had a bad year, for example, if you lost $5,000 or more, or whether you have lost significantly or insignificant amounts of money trading or investing in cryptocurrency, so we'll give you a chance deduction for this year. Or it may give you future tax deductions to offset against your future crypto gains. If you fail to record it properly in the current year, and then let's say the following year you make a lot of money, you'll be left feeling like you've made a mistake by not reporting it properly in the current year. If you've already filed a tax return, it's possible that you did so incorrectly to the point where you have to go back and make the necessary corrections. In that case, you'll have to find an amendment with the IRS and make necessary modifications. Because dealing with your state is such a hassle, it's best to just take care of it properly and take advantage of the tax deductions and other benefits that come with it. You've just finished setting up properly and you don't want to waste time going back and cleaning up your messes. So, that's just a recommendation which would result in a crip in the losses. Those are the pieces of advice we're giving to you. This was shot in a single take. This is our video about cryptocurrency taxation. If you have any other queries, please post them in the comment section below. Thank you very much for tuning in, and best of luck with your investments.